mean, I wonder how many people out there think that gold is manipulated. That's the first question. I know some of the guests on your show don't really think it is. I think it is. In fact, I think it's unequivocally manipulated and has been for a very long time. And that's the first premise, because the hallmark of the manipulation has been counterintuitive price action. And, whether it be the start of a war, or a market collapse, or whatever it may be, when we think the price of gold should be flying, quite often the folks in charge will sell short on the exchanges and drive the price down.
During the 2008 market collapse, gold's price shockingly dropped from $1,000 to $700, a move that defied logic. At the same time, global mints were sold out, with no supply available and no one willing to sell. Yet prices kept plummeting. What if this wasn't just a market reaction, but a deliberate strategy? Andy Schectman believes that gold's true value has been systematically suppressed for years by those in power. He points to the counterintuitive price action and the scarcity of physical gold as evidence of a deeper, more calculated manipulation. But this isn't just a story of market control. Schectman warns that this kind of manipulation could be laying the groundwork for a financial war, as global powers quietly stockpile gold while prices remain artificially low. What does this mean for the future?
Now, every time that happens in the middle of or in the midst of a market correction, stock market correction, that is attributed to traders rushing to liquidity, throwing out the baby with the bathwater, trying to, grab their most liquid asset and use it to pay off margin debt or whatnot. I don't know that I believe it. I think, it's an attempt, I believe, of the powers that be to mitigate the outcome of the correction. It's to mitigate the thrust and the drive, not only to accumulate gold, but to delink the rationale that people would employ for owning it. Oh, it's an archaic relic of the past. It's a barbarous relic. It's not inversely correlated. See, the market collapses and look what happens. And even if I'm wrong, even if it truly is a rush to liquidity and the price falls, if we go back to 2008, that's a great example. And we've talked a lot about this, you and I, over the years. But in 2008, when the market collapsed, we saw immediately the price of gold and silver get clobbered. And gold fell from 1,000 to 700 and silver from 21 to 9. And one would think, in an environment where the price of asset A and B fell by 30 and 60% respectively, that there's no demand for that it's being dumped globally and the price is just cascading down. But that really wasn't the case, because in 2008, every single mint across the globe was shut down. Ultimately, the U.S. mint was shut down 7 or 8 times that year, and really was the model of inefficiency, much more so than they were the last 3 or 4 years. But it was much deeper in that. The Rand Mint in South Africa, for the first time in its 60, 70-year history, was sold out of product. The Perth Mint that summer, August on, took no new business. That's it. We're out. And the Austrian Mint and the Canadian Mint were anywhere from 12 to 16 weeks back ordered. The U.S. Mint, at the time, I was very close with a man who's no longer at Prudential Beige. He was the gentleman who nominated us to be an authorized reseller. And I would call him and talk with him quite a bit. And I remember having conversations with him, and he would say, listen, man, there's nothing you can do. We cannot take any orders right now. We'll let you know when you can. But everything's gone. Now, what was unusual to me, and this has really shaped my view of the physical world, is that the price was getting clobbered on paper, yet everything was gone. And it wasn't just that the mints were out of product. Refiners from Germany, or Ireland rather, would call me and say, listen, I've seen you before online. I know who you are. I've seen you at conferences. We have accounts at Delaware Depository, they would say. Our traditional supply chains in Switzerland and Germany are gone. They're dried up. We'll take anything that you'll give us. I would lay in bed at night and say to my wife, I think we're going out of business. I can't get anything. We can't place an order. And it also underscores No one was selling. Nobody. I mean, nobody. And the public wasn't selling, even with the price getting clobbered. Nobody was selling. Everyone was freaking out. And I would say, what are we going to do? There's no secondary product. We've sold everything in our vault. We can't get anything. The US Mint says, we'll call you, don't call us. And then I get a phone call from David Morgan, the David Morgan, who everyone knows, the silver guru, who I've been very tight with for a very long time. I owe David a lot. He helped me a lot in this industry back in the day, and this was another example. He called me up before he called anyone, and he said, "I will hook you up if you want before I let anyone else know about this." He said, "There's a group here in Washington I've been working with forever. They've been recycling silver out of medical devices. They're called pyromet. They'd like to throw their hat in the ring." And they'll make 100-ounce bars. And these are the ugliest 100-ounce bars you've ever seen in your life. In fact, they just said 100 ounces. They didn't say what, 100 ounce what. And for months, and then he talked to some other dealers. Pyromet 100-ounce bars were the only thing you could buy, literally the only thing that you could buy in North America. And this probably would have been July, August. By October, early November, the Royal Canadian Mint and the US Mint finally started to say, all right, we'll take orders. With silver at $9 an ounce, you would pay $17 or $18 to receive your silver, and you'd wait anywhere from 12 to 16 weeks to get it. Had to pay up front. We can go back as recent as March of 2020 when the market collapsed. And what happened? I think it was pretty much coinciding, if I'm not mistaken. I think silver fell to $11. And you remember you couldn't buy anything for short of $20 anywhere, and you'd have to wait, and you didn't know, there was uncertainty. So anytime that you distort reality, there is the unintended consequence on the physical market, where there are people who understand what's really happening. The value hunters say, I'll buy, thank you very much. And as the world is getting scarier, you look at it and say, well, geez, I mean, the price is $9 or $11 and I have to pay 20. How does that work? So the bottom line is that every single time I have seen this happen, you have about 10 minutes to react. Yeah, if you are really, really good and really lucky, when the market collapses and you feel like catching a falling knife, you probably have a day or two where you could do it. But it has been my experience that that's about it, because everything like that gets gobbled up at bargain hunter prices. And it's a distortion. It's all the same as the powers that be pushed oil down to negative $40 a barrel. How'd they do that? It's the tail wagging the dog. It's the futures market controlling the price. And so in an environment where the BRICS nations and the rest of the world are massively accumulating gold, I don't expect them to be able to hold the price down very long. You look at the corrections lately, they're very shallow. But if they are, and they're able to do what we saw in 08 and in 2020, within just a few days, the premiums were as much as 100% of the product with substantial delivery delays, or more than 100%. So it's a tricky one. If you're really good and really lucky, you may get away with it, but it wouldn't be my preferred plan of action going into what we're about to go into. I don't know that if it really is what the real price. So in Shanghai for a long time now, the price of silver has been much higher than in the West. It started out $2 higher, 250, 350, $4 higher on the Shanghai Metals Exchange. And I think that's well below what it should be, but it's enough to entice the idiotic traders who have the ability to buy in the West and deliver in the East. That's a pretty hefty arbitrage for them when you're talking millions of ounces. So yeah, I think this is certainly something that you could see being raised higher and higher and higher and higher to arbitrage everything that isn't nailed down. And so, with all the talk of revaluing gold and gold anyway, in the gold revaluation account these days, Senator Cynthia Loomis, the senator from Wyoming, talking about using it to fund the Bitcoin strategic account that Trump talked about when she spoke at the Bitcoin convention in Tennessee. The real price of gold and silver, no one knows what the hell it is. That's the truth, because of all of the distortions in asset prices over the last half a dozen years due to low interest rates and easy money. The one things that were stepped on and weren't allowed to over express themselves were gold and silver. And just based by the acquisition and by the backing of, when you look at the BIS and and the IMF plans for cryptocurrencies or central bank digital currencies all seem to be pegged to gold to some degree, whether it be the unit or the report that came out of the IMF saying gold is a barbarous relic, or an international reserve currency, a barbarous relic no more, question mark, or the Kristalina Georgieva, the head of the IMF, saying, CBDC is not pegged to something, would be fiat. They're all talking about gold, and I think the price is way distorted. And these countries have been using the suppression of the West to accumulate. And when they all have it, that suppression will end. It will end badly. You can only manipulate a market by pushing the direction it's going, at least for an extended period of time. And these countries are now, like I've been saying, motivated, coordinated, sophisticated, and wealthy, and they are using every chance they get to drain the system using these Western prices, which are artificial. They are not real. And even though they're higher in Shanghai to entice arbitrage, they're not real. They're not real, even remotely real. And they'll be much higher based upon the amount of currency creation and based upon the projects that are coming and what it means to, I think, install confidence in a system that's dying for some confidence, dying for something real, because we've squandered that, ad nauseum. So yeah, I think gold and silver will go higher than anyone thinks possible, 100%. And what we see in Shanghai is just the very beginning of it. I think before it's all said and done, you'll see them jack prices up more and more and more and more in the last ditch attempt to siphon away anything from this fraudulent Western system.
Thanks for watching. Let's quickly recap. Andy Schectman discussed how gold prices have been manipulated, especially during crises like the 2008 market collapse, despite soaring demand. This manipulation could have serious global consequences, potentially leading to a financial war. If you have thoughts on this, drop them in the comments below. We'd love to hear from you. And before you go, make sure to subscribe, like, and share this video with others who might be interested. Your support means a lot to us. See you in the next video.